But the other thing is there's this fallacy out there that everybody sometimes thinks they can self-fund. And honestly, if you look at the cost, and I think Megan, you brought it up, how inexpensive it is per dollar of coverage, you're never going to be able to self-fund unless you're a multimillionaire.
This is Insight, scaling lessons from the street. In this series, we mastermind a set of topics plaguing women entrepreneurs on a mighty growth path, such as mindset, business modeling, sales, marketing, finance, and legal. Whether you're looking for world domination or to work less while being more profitable, you'll find learnings in here from women who know the journey and fight in the trenches every day. Insight is co-hosted by Andrea Henry, Megan O'Neill, Sheila Cummins, Susan Diaz, and Wendy Brookhouse.
Hi, Wendy Brookhouse, founder and chief strategist with Blackstar Wealth Partners. I help women find, keep, and grow their wealth. So today we're going to talk about safety net creation for business owners. So what is a safety net? Well, if we think about things that could go wrong and being prepared for them, if something didn't go right with your product and it wasn't doing well, you might have to make a claim on your errors and omissions insurance or your liability insurance. What if you don't have sales one month? Well, part of a safety net is making sure you have the buffer to get through a month if there was something that wasn't coming and hitting from a revenue perspective. But it's also very important because sometimes people look at the retirement savings as a safety net, and I have seen this happen where people have completely drained their safety net of RSPs and things like that, and that can be good, that can be bad. It depends on where you're at. So we're going to talk today about the elements to build a safety net, and how can you do that? So when you think about safety net, Susan, what comes to mind for you?
I think insurance comes to mind for me. I mean, certainly from the business's perspective, but also, as I've grown, perhaps I've boosted things like that for myself and the family before we've gotten to the place where we can do it for the business. I've got to say, I'm not necessarily as much of a big needer of cash in my bank, I guess, because, I do, for the most part, follow a take credit, pay it back kind of way of approaching business. But if that were not the case, then I would like, this is something that makes me feel comfortable, which is a safety net in my bank. So yeah, I would guess that's what comes to my mind when I talk safety net.
I love that. One of my questions I ask clients on the intake is, what is the number that needs to be in your bank account for you to feel safe, right? And for many people, that safety net is almost that number for them so that they can sleep at night and not worry so much. And it's different from everybody's perspective. And it's interesting to break it down personally versus in the business, because those two numbers can be vastly different for people. And I've heard numbers from as low as $50 to $100,000. So that's why I say it's not a right or wrong on that. It's about what keeps you awake. It doesn't what lets you sleep at night from that perspective.
Here.
Absolutely. So, and I'm picking on people with questions just to get perceptions out there. And one of them, I'm going to ask Andrea, what does insurance mean to you? Because for a lot of people, when I start talking about insurance, it's almost like I've put on what was that guy in WKRP, the Les Nessman shirt, and people are running away from me because I'm talking about insurance. What does insurance mean to you, Andrea?
Insurance is amazing. I think the concept of insurance is amazing. You pay a low monthly or yearly sum. It gives you peace of mind. And if something bad happens, they cut you a check. I think that's an awesome system. I think if we didn't have it in place, if there was an opportunity to have insurance, people would miss it a lot more and would not view it in such negative ways. But I know for me, one of the first things I did when I started, even before I had kids, I think with my first paycheck, I invested in life insurance. I've always been a big believer in preparing for the what if. And because I'm sort of like Susan, where I'm not great at saving, I feel like you need to have at least one. ideally both, right? Ideally you have savings and insurance. I always knew that I wasn't great at the savings part, but I knew insurance was important. And so one of the first things that I did when I started my business was invest in life insurance and critical illness insurance through the corporation. And then when I ended up actually getting sick for something that I would never have expected, with no family history, having critical illness insurance really made the difference between me being able to maintain my business, maintain all of the expenses, and focus on getting better. And so I have become somewhat evangelical about it. My retainer clients know that I ask questions, even though I don't provide insurance services. I ask that on my intake form because it's such an important part of protecting yourself and protecting your business to have that what if, right? So I can help you from the legal side in terms of the contracts and in terms of the corporations dealing with all the what ifs, but you need to have the actual cash to me, right? You need to have that company that's been around for 100 years that says, if your house burns down, if someone sues your business because they've slipped at an event, we're going to cover you. You're not going to go out of business and become homeless because of one mistake.
Andrea, thank you for that. I think I might have to cut this audio out and just send it out to the world. Insurance really is about mitigating your risks. And when you look at the risks of critical illness, this is what it's so interesting. Almost, if I asked you, do you know anyone who's had cancer? Everybody puts up their hand, right? There's a 1 in 3 chance that you will have a critical illness before the age of 65. 1 in 3. Now let's translate it back into, yet this is an optional insurance for people, one of which, we're going to have a discussion and a debate about should I buy it versus if I were to tell you that there's a 1 in 10,000 chance that you will actually make a claim on your house insurance for a fire, you're like, oh yeah, but I have that. Right? So when we look at the probabilities, it's fascinating from a mindset perspective. And Megan, I think I'll go to you next because I just brought that up. The mindset, it's almost like I wish I could take and describe the benefits and not use the word insurance, then that people would actually be way more likely to purchase. What are your thoughts on that, Megan?
Yeah, I think they have a fear, maybe it's a superstition, I don't know, that if they have insurance that they're going to bring it on, or they just don't want to deal. They just don't want to deal with it. I mean, if we ask Andrea about a will and how many people don't have wills, it's amazing how many people don't have wills, right? And that's because they're afraid to get into it. I also think, just thinking about insurance myself, I think you have to understand your insurance, don't you, Wendy? Because we had my husband who works with his hands. He's a physical guy in terms of his profession. We have tried to claim on disability insurance through one of the big banks. And of course it didn't work out. It was something like 3 or 4 months until it kicked in. So I think also if you've made a mistake, you need to do a little bit more research. I know we learned our lesson in that sense.
I think that's interesting. You brought up another point about, is the stuff that the bank, when you get a loan or you get something else, is it sufficient? And understanding the pros and cons of that, I think it's because it's easy that we sometimes sign up. Oh, I just have to answer 2 questions and sign up. But if you were to ask a professional like myself who deals with this stuff every day, we can point out the 5 reasons that you should buy from an independent versus from the bank, and taking the time to do that and do the work and work with an independent who understands finding the right product for you. So
yeah, and I don't think
really sorry you went through that experience.
Well, and of course it was you think the bank is going to be trustworthy. Right? That was the reason why we learned our lesson. I wouldn't have known to go to an independent over the bank. I would have thought to go to the bank first. It's like a mortgage or something. You always think I have to go to the bank first. So yeah. I'm glad that you're talking about this.
Yeah. So in my mind, there's a number of critical ones that some of them are offered through people like myself who are kind of financial advisors / planners, which would be your life insurance, your critical illness insurance, and your disability insurance. But you should also be dealing with other professionals on liabilities insurance, errors and omissions insurance, all those pieces. for example, in my business, because of I do investments and all those other things, I have a corporation and I do consulting. I have 3 errors and omissions policies, and none of them are cheap, but they're all very important for me to have, so that I can make sure that if something, that there's a backstop for that type of advice that I'm giving. So, make sure you read the fine print also, Megan, is another great lesson that you've learned along the way, and I've learned, because at one point I thought I was covered under one and I wasn't. So I had to do my due diligence to make sure that happened.
And I think it was Andrew, you were saying you always had life insurance, or... Yeah, you always had life insurance. So did I. Even before I had kids, I had life insurance, and especially having a partner, because I didn't want to leave him. We had a credit card, a mutual credit card, and I didn't want, if something ever happened to me, I didn't want to leave him with any sort of debt. So that was my mindset in that area.
Here's another thing that I think life insurance is so important, especially if you have children. And this is the hardest point sometimes because I have no children, but I truly believe if you've brought a child into the world, your responsibility is 18 to 20 years, whether you're here or not. So that has to be dealt with. Something that people oftentimes forget is that if they have business loans inside of their corporation or anything, they may have personal guarantees that they're going to need to figure out and make sure they add it into their insurance needs analysis in terms of total things that have to be dealt with prior to the payout coming out to them. So something that a lot of people forget about is that, and I guarantee as a small business owner, 99% of us are personally guaranteed. I have some clients who've had very big, very successful companies, and they're still personally guaranteeing every loan that goes through that organization. We sometimes think, I've been around a while, I won't need to do it, but we do. So it's something to kind of keep in mind, that it's super hard to negotiate that out. But yeah, so life insurance is critical, along with critical illness insurance. The third one I was going to talk about was disability insurance. Now, there's a couple elements to this that I look at. So I own my disability policy personally. It is not held in my corporation. And the reason for that is I want to make sure that my benefit will come to me tax-free, so that I don't have to pay tax on it if I get the benefit, which would be, I went down for about 90 days, and after that, my benefit kicks in, and I have this tax-free money coming into my household. What a lot of business owners should think about, now it's a little different if you are working at home and that type of stuff, but if you have staff, if you have premises that you've signed leases on, you have obligations whether you're able to work or not. And so how do you cover those? And that's a business overhead expense policy. And I don't know, do any of you ladies have a business overhead expense policy? No. It's different in that it is actually an expense you can deduct through your corporation, number one. Number two, it's a benefit that basically pays for 1 to 2 years that covers all the expenses. So if you have loans, employees, you have rent to pay, these are some of the things that would be covered by that. So I have that so that if I go down for 1 to 2 years, all those expenses are paid for. I have time to get better and come back into the business without having all those people suing me for money that I didn't pay them. So it's a very good thing to think about as you grow your business and become bigger and have premises and employees and things of that nature. And so the other safety net, I think, is having some cash put aside. I know, Susan, you talked about having access to credit. That's in one sense an ability to be able to go get cash. But the other thing is that for you, when you think, Megan, about the one you were doing, you needed 90 days worth of money to cover yourself before that would kick in. So that's a great rule of thumb on a personal basis, is having access to credit or access to cash for a 90-day period so that you can cover off while your waiting period is in play. You can get lower waiting periods, it just costs more money. When we talk about this stuff, Susan, does any questions come up for you?
Yeah, I think it's not so much a question as it is an observation, Wendy, about the importance of advice and sort of staying in your own lane. Because these are the kind of things that as a business owner, I want to have 30,000 foot view about how I want this to be potentially like looked at and structured and what is my philosophy. But then in the end, I want someone to advise me on these things, if I may.
That's awesome.
The lawyer and the financial advisor, all in this room, to tell me how to do this so I make the most money and I, don't have to only rely on being able to earn a living when I can show up and work.
Perfect. Shelagh, you and I've had lots of conversations about this stuff.
Oh, I love it. But I think, the point I'd like to put on the table is how powerful cash is. And cash in a business it can be the deciding factor to whether you have a growth that works, to whether you have money to invest, whether you can pay off the credit, whether you can stay in business. And I think we underestimate having that cash available. And being someone who bootstrapped her business right from the get-go and did leverage credit in order to do it a lot of times, and I have dug myself out of debt that wasn't debt for having, great shoes or a new car or a house. It was literally my website, my sales, my copy. I leveraged credit. And if I had had access to capital in that moment, that would have been a game changer for me. And one of the things I've had to implement in my business is building up buffers. And when you're used to having nothing and just going paycheck to paycheck and month to month and just fighting for every penny that comes in, it's hard to have money around you. And I think a lot of entrepreneurs are not accustomed to having buffers. They think, oh, I've got this pot of money, now I can go do this. Or, oh, I've saved up this much, now I can go do that. And one of our most powerful assets is to be able to build up buffers and have money around us that's not earmarked for anything. So not our tax savings, not our outsourced budget, not our this, just having capital, cash, sitting in a high interest, compound interest earning, where it's earning interest and turning over and growing without a purpose, and being okay having that around us. And I think that we underestimate how expensive it is to run a business. And I see so many women take out 100% of the money that they have. They earn $100 and they take $100 out, but then there's never any money left. And so they're starting every month at 0.0, and that is a hell of a place to start, with the gun to your head at the first of every month thinking, I've got to make X amount this month. And so when we can slow the train down and manage our cash flow and understand how much is coming in and when, and being able to reserve cash for taxes for us, paying us, we really only get to pay ourselves often less than 30% of every dollar that comes in. And understanding that whole flow and how to allocate funds to all the different buckets, I think is as critical as having insurance, because that cash is insurance in your back pocket without having to sign any documents. Absolutely.
I think though, I just want to stand on that just a second and talk about, because you know me, I'm a big, let's get some buffers, let's get some cash in place. I love that. But the other thing is there's this fallacy out there that everybody sometimes thinks they can self-fund. And honestly, if you look at the cost, and I think Megan, you brought it up, how inexpensive it is per dollar of coverage, you're never going to be able to self-fund unless you're a multimillionaire, honestly. So I'd like to it's very rare that someone can actually self-fund. What would happen if they were out for the count for 12 months or 18 months or longer? So, but I think buffers are good. Making sure you have the right products with the right features and benefits in place, making sure you understand how they work and when they would come into play and why you should do it is also very important when it comes to building your safety net as a business owner. And it is a key thing that you should be focused on almost from the get-go, like you guys have talked about, in terms of making sure those things are in place so that if that happens to you, or like the unfortunate stuff that happens to people, that you're not decimated from a financial perspective.
Thank you for listening to Insight. If you enjoyed listening, do us a solid and leave us a review. It helps keep us motivated to put our time into producing episodes of value. Thank you.